Hey everybody, welcome back into Mining Stock Daily in this week's long form episode. As we closed out the month of August, welcome into September. It was a pretty interesting and volatile month, but gold showed signs of life later in the month. We will see what the month of September has in store. We're also getting into conference season, so we'll be reporting from and recording a lot of episodes at the Beaver Creek Precious Metals Summit in the next couple of weeks, so stay tuned for a lot of those corporate updates. Today we've got Matt Geiger back on the podcast from MJG Capital. He's been a world traveler as such, traveling to a lot of different countries and looking at some of the projects that him and his fund have been investing in. And so we talk a lot about Brazil. We talk a lot about some specific companies that we're both invested in, actually, and get a bit bigger sense of what's going on in the junior equities market. Where should people be looking in this volatile market to where they possibly could see some upside sooner than later? Great conversation with Matt. It runs about an hour, and I highly recommend listening to it in its entirety. Special thank you to Fireweed Metals, Arizona Sonoran Copper, and Western Copper and Gold for their continued support of the podcast. Please, if you wouldn't mind, hit that subscribe, like, share, all those things on both the YouTube and the podcast network. We really appreciate your feedback. Thanks so much. Here's myself and Matt Geiger with a good conversation. Hope everybody enjoys it. Be well. Hey everybody, welcome into this week's long form episode. We're going to talk a lot of themes here, but hopefully spend most of the hour discussing not only precious metals, base metals, but the junior mining market with our good friend over there in the west coast of San Francisco area, Mr. Matt Geiger of MJG Capital. Matt, welcome back to the pod.
It's great to join you again, Trevor. Hope you're doing well despite Chelsea's relatively poor start to the season, I must say.
Oh, ouch. Ooh.
Not that I'm reveling in it or anything.
Still young, still a lot of hope. Hey, we at least after last season, Matt, we're just gonna forget what happened about last season and rebuild.
Quite low, to your credit.
I mean, as a Californian, you gotta appreciate what Todd Bowley's doing to your arch rivals there.
That's true. I still have very mixed feelings about your head coach, though, Poch. He was a great manager at Tottenham for many years, but he definitely did go to the dark side. I'm sorry.
Oh, no, he just went to someplace where he could win trophies, Matt. So let's talk about junior mining. No, that's enough soccer bashing for the time being, because you and I could just do that for the entire hour if we really wanted to. But listen, hey, you have been on the road all summer, seems like. In fact, I'm surprised we were able to catch you at home here in your office. You've been a world traveler as of late.
Yeah, that's right. I mean, I do a lot of traveling generally, whether it's for conferences, site visits, what have you. But I took a look at the MJG portfolio kind of late Q2, and it became abundantly clear to me that there were two trips that I had to prioritize. And the first one was to Brazil, which I did in early July. Was able to visit the Carajás mining district and visit two holdings there. One is Bravo Mining, which is our largest single holding in the MJG partnership, and spent some time at the Luanga project with their CEO Luis Acevedo and full-fledged team that they have there, 4 rigs turning, and they're firing on all cylinders. Then spent a few days in Rio, and then back to the Carajás to check out the Planalto project, which is a joint venture between Capstone and Lara Exploration, which is also one of our larger holdings. That's, of course, Miles Thompson. He was CEO of Reservoir Minerals and had a big exit, big win at their Kukari Peki project in Serbia in the middle of the last decade. So very honest, experienced, high-quality team there as well. And good deal terms with Capstone. They basically have a free carry, through construction financing, and actually Capstone will put up the money then for them. So really, it's a free carry through first production. So Brazil at the moment comprises 30% of our portfolio, which is far higher than it's ever been. So this is not the only trip I'll be taking down there. It's important to keep close tabs both on our specific investments, but also the country as a mineral jurisdiction as a whole. And I think there's no better way to do that than to be there, boots on the ground, interacting with locals, and gleaning what information you can. So that was an important trip. And then just recently came back from a week and a half between Chibougamau, Quebec, and then ended in St. John's, Newfoundland, and spent a few days with the Altius Minerals management team, which are based out of St. John's. Chibougamau also has quite a bit of exposure within the MJG portfolio. We have at least 3 positions with projects that are either in Chibougamau or within the general vicinity. And the most exciting of the visits there, I was able to drive 2 hours north along the Route du Nord, and visited Kennerland Minerals' Frotet project. Unfortunately, Zach Flood was not there, but I had him on speed dial throughout the visit. They're actually renting the camp out to Sayona Mining at the moment, but that's just a very temporary move during the summer to pay some overhead. And Sayona will be out, Kennerland will be in within the next couple weeks, and they're about to launch into a Phase 6 drill program with their partner Sumitomo. So I think that was important to see. Got a good feel for the lay of the land, any social or permitting risks, which I did not come across while there. And then also did some poking around a bit closer to town. Couple site visits that were unofficial or unannounced, I should say. So I don't think I should mention the the projects that I snuck onto. But as folks know, there are a handful of juniors that are active in that immediate vicinity. Looking at copper, iron ore, vanadium, gold assets. There's a whole host of activity there.
So I want to break that up because I think there's a couple different directions we can take the conversation, both on the theme of Brazil and then also with your visit to Kennerland Minerals. I'll be quite honest with you and be transparent. I'm trying to buy this dip. We're recording this Wednesday morning. Kennerland Minerals has dipped, and I'm trying to buy this right now. I'm partially filled, so I guess as of right now, I'm a current shareholder of Kennerland. They're also a partner of the podcast. But I've always thought that this Frotet project really is one of the bigger gold exploration stories over not only the last couple of years, but currently being explored right now. And there's a couple, there's some really good exploration happening in Canada, Snowline Gold, obviously having a lot of success. Sure. But I think this project with Sumitomo has a lot of potential to add some incredible ounces. And I've talked to Zach numerous times on the podcast about, okay, what is the next step to put some actual numbers on this? I mean, they continue to add more stacked veinage with the drill program. They've done some very expensive deep drilling. The conversation out there is, do they need to continue to do the deep drilling? Can they just add, strike to this and add ounces that way? And then what is the process of putting some sort of resource estimate on Frotet and the Renault discovery? So Matt, I mean, I'm not asking Zach. I've asked him that numerous times. I'm going to ask you, what would you like to see as a shareholder here from Kennerland Minerals and their friends at Sumitomo?
So I will, for full transparency as well, say that we also nabbed some shares this morning in a stink bid that's been out there for a couple weeks at this point, and actually highlighted Kennerland Minerals in the MJG latest MJG investor letter, which is available on our website at mjgcapital.com for anybody that's interested in reading up on it. Look, I mean, Sumitomo's involvement is both a blessing and a curse. On the positive side, they're a deep-pocketed, highly credible, driven group that has the ability to push this project forward over a number of years. It's my understanding that they're extremely proud to have been involved with a grassroots discovery from its very earliest stages, and would like to push this through to production. Now, whether things change down the line, that remains to be seen. Sumi, as you know, is not traditionally known as an operator for gold mines. Generally, they'll be a minority partner, but this is certainly within the realm of possibility. Those are the positives. Negatives are that I mean it's a massive corporation. So I think if the 80% stake held by Sumi was instead within a junior, a single asset junior, it'd be a lot easier for the market to benchmark what Kennerland's 20% stake should be worth. That's simply not the case. So I think a lot of people have just kind of thrown their hands up and given up on that. But yeah, it's important to note that the project's already seen 40 million of expenditures between Kennerland and Sumi, and upwards of 70,000 meters of drilling, if I'm not mistaken. So it's getting quite advanced.
Right.
The project's open for expansion both laterally and particularly at depth. And look, Sumitomo is going to approach it the way that Sumitomo wants to approach it. They're the operators. They're pushing this forward. Look, from a Kennerland perspective, I think we're at the point where we would like to see Sumitomo start wrapping a resource around this, focusing on infill drilling. I think it is within the realm of possibility that we see a resource next year. That's certainly not been guided by Kennerland or Sumitomo. But it looks like with another round or two of drilling, we should have critical mass for a pretty decent multi-million ounce deposit with clear upside potential to expand. So from my perspective as a Kennerland shareholder, we're patient. This is close as it gets really to a buy and hold in my mind, at least at the company's current valuation. I want to let Zach and the team do their good work, not just at Frotet, of course, but across their broad project portfolio. But I think it would be in our best interest to see a resource wrapped around this sooner rather than later, because it's clear to me that the market hasn't taken the time to really think about the valuation of Kennerland's 20% stake, and a maiden resource would be a great opportunity for folks to pull out their pencils and kind of reassess what that could be worth, relative to Kennerland's valuation. And it's important to note half of Kennerland's market cap, in fact, over half of Kennerland's market cap at its current share price, is covered by cash and marketable securities.
They just made another
So
12 million bucks. They sell and lift shares.
Yep. Yeah, I think it's 23, 24 million in the bank, another 3 or 4 in publicly traded marketable securities, and then some private positions as well that, at least on paper, could be worth another 5 or 6 million. Of course, you gotta asterisk that as private names, but they've got a lot of good stuff. It's a real nice sum of the parts story, and particularly in this market environment, I mean, Kennerland's a good use case. There are really two metrics that I'm really honing in on, and I'd encourage other investors to also at least consider them when looking at new investments. The first is downside potential. And the thought process here is, in an absolute worst case scenario, how far would the share price of company X need to fall before it's trading at its liquidation value? And your average junior, as has maybe 5% of their market cap covered by cash, 10%.
Right.
And so, I'm not predicting that all juniors tomorrow are going to trade down to their liquidation value. That's not going to happen, of course. But, for those types of stories, it's within the realm of possibility, at least, that the share price could fall 90% before it's at cash breakup. Kennerland's, we're looking at 40, 50% downside at current share price. Worst case, before, you're getting it for the value of its cash, pretty much. So that's one metric I'm looking at. And then the second is, and these often go hand in hand, but the second one is runway towards before the company will have to dilute again. And your average junior, as you know, is on a dilution treadmill, coming back to market in good times and bad every 6 or 12 months. The beauty with a company like Kennerland's, 23 million in the bank. Yes, they're spending a few million this year on 100% owned projects through grassroots work, and even potentially a bit of drilling, it sounds like, at their South Uchi project. Maybe that'll be pushed off till next year. So these guys aren't adding cash to the treasury, but as it stands, I mean, we're looking at 5, 6, 7 years of runway as it stands before they're going to have to come back. And that's just a huge advantage over your relative junior. There are other names out there aside from Kennerland that are like that, but they're really few and far between in the space. And I think particularly in the rough and pretty depressed market environment that we find ourselves in, at least within the junior sphere, that's a huge advantage over the typical peer.
Yeah, that's interesting because I wanted to run this idea about you of just how asleep are resource speculators and investors right now. And on the caveat here, Matt, I mean, I just had a conversation with Brian London the other day, and I said, you can take technical analysis on junior equities and look at their charts, and like if it works for you, great. If a lot of times I don't know if it exactly is if you can adhere to it, because a lot of times, like right now, it's just such low volumes. Any day could be anything.
Sure.
And so, but I do think you can make the argument that's, if you look at some of these charts with similar names that have a lot good ounces, a good resource in the ground, cash in the bank, are still out there doing some marketing, getting the word out there and sharing what they're doing. Some of these charts are certainly showing some sort of bottoming effect. So, I mean, take that with a grain of salt, if you will. But from what I see, it's like I could see some things, some well-known companies out there in exploration development, that it looks like charts are bottoming.
Right.
Well,
I mean,
that's
what I can say, and I think you're feeling this as well, is I mean, sentiment is very poor, and
it
there are
is.
anecdotes left and right, both what I'm seeing on Twitter, what I'm hearing within my network, the behavior that we're seeing from companies. I mean, there are folks out there that think this is as bad as it's ever gotten. Now, I think that's
Yeah.
foolish, personally. Like this is a child's play from my perspective compared to the 2014 or 2015 period. But it is bad. And there are even investor mentors of mine, people that I have a huge amount of respect for, that have been poking around the junior patch for years, that are saying, yeah, I actually have far more exposure to operating miners and really the blue chip big boys than I ever have. The junior space seems a little bit broken. That actually is music to my ears, personally. I view that as like as a clear contrarian indicator. So again, I don't prescribe too much to technical analysis or reading the charts. I think there's potentially some value in that. That's just not my style or skill set. But from a sentiment perspective, that potentially aligns with maybe what we're seeing in the charts here. Real
Yeah.
despair across the junior space, and I think
Yeah.
that provides us an opportunity, at least for folks that are willing to think 4-5 years in the future, which is very hard to do when you see your account and many of your positions in the red,
Yeah.
as some investors are feeling out there. But yeah,
Now,
I haven't lost faith
well,
myself.
but I also think, I mean, and you take it as a silver lining on the general market of junior mining. The market is still rewarding really good discoveries. And I think the greatest example of that this week was the hit out of Lavras Gold. You mentioned Brazil. They're based out of Brazil. I mean, it was a whopping 340 meters of just over 1 gram per ton gold at 117 meters depth. But that in there was 160 meters of about 1.8 grams per ton. And people just bought into this equity in droves, running it. I think it was almost 140%, I believe, give or take. I mean, it was a great return. If you owned it at 20 cents, you're sitting pretty happy right now. But the market is rewarding discoveries here, Matt.
Yeah,
So is
I
that
know.
a
I think
silver? Is that a silver lining for you?
it is. No, I think you hit on a very important point. I mean, aside from anything lithium focused, really the only type of story that's seen love in the current market environment is these post discovery plays. And we're not Lavras Gold shareholders. I've actually followed that company quite closely. I'm
Hmm.
thrilled for them and shareholders. I like the CEO there, Michael. We just have so much Brazil focused exposure. As much as I like the country, I don't feel comfortable as it is to be adding additional Brazil focused positions just from a risk management perspective. But that's definitely potentially a game changer there. One of the concerns I had about that project was just size and scale. And they may be answering that question right now. Jury is still out, but it's good to see them seeing some love. But to your point, I mean, in addition to the collective minings and the Snowline Golds, WA1 Resources with their niobium discovery in Western Australia is another example. Like we
Mm-hmm.
have seen what looked like bona fide discoveries really do well over the past 6 months. And then, in the past 6 weeks, we have groups like Lavras Gold. I know that was just from this week. That's the most recent example. But you have Founders Metals at their
Yeah.
Antino Gold Project in Suriname. They've been churning out some pretty impressive headline numbers there. They're seeing some attention, which is good to see. And then, of course, there's the American West Aston Bay deal up in Nunavut,
But we don't
which
have
is
results.
taking the world by
We don't have results.
we don't have results. Yes, the jury is still very much out there. And yeah, the proof will be in the pudding. It is a dangerous game to be speculating purely based off of visuals. And both companies are up 5 or 6x, over the past 8 weeks. So it's an entirely different value proposition from my perspective. Buying today relative to buying where they were in the spring doldrums. So I like I don't know the American West guys all too well. I know one of their board members, Dan Loeffler, from his time at Western Areas. I do know Thomas from Aston Bay, and we actually took a very close look at the private placement that was regrettably canceled upon the results coming out. I understand from Thomas' perspective why that was the case, but we actually had our hand up for a decent check there. C'est la vie. Needless to say, I'm not one of those that views the world in a zero-sum perspective. And even if we're not invested in a specific story, I'm rooting for success, for good people at least, because I also know that it benefits others in the junior space. When you do have real bona fide winners, whenever there's a liquidity event, that money does inevitably cycle back into other juniors, and it creates a virtuous cycle. So I'm crossing my fingers for them. But again, I think the bar is pretty high with current results, and yeah, the proof will be in the pudding. Is this 1% copper we're looking at, or is this 5%? Answer is probably somewhere in between. But for anybody expecting 5 or 6% copper, at least for these initial rounds of assays, like that seems to be a relatively optimistic hope. But we'll see. We'll see.
Yeah. Let's go back to Brazil, because you mentioned you got a lot of capital allocated to that country right now. 30%. I think you said 30%. I mean, that is quite a bit. Knowing you and how
Yep.
you like to manage your risk regarding not only allocation of capital but the jurisdictions, that's pretty high for you, Matt. I think I know you well enough to say that that's pretty high risk for you. But Brazil. Let's talk about Brazil and its position in the world right now. And I think you and I talked about this a little bit the last time you were on the podcast. But we had, that BRICS conference the other week, and they're trying to add more members. Obviously, not much in terms of that BRICS gold-backed currency that a lot of the gold bugs were really, all up in arms about leading into the conference. But how do you kind of look at Brazil within this group of countries now, and its unique position with not only the BRICS partners, but also its position with the United States continuing to be a very prominent trading partner for the West? Are you watching? How closely are you watching these developments, and then what does it mean for Brazil's, general massive commodity sector, not just the metals?
I'm watching very closely, and I'm rehashing a couple points in the most recent investor letter I did. Kind of a 5 or 6 page write-up on Brazil as a mineral jurisdiction. I figured that was justified given the amount of exposure that the portfolio has. And in terms of its strengths, and I'll get around to the BRICS question. First is just the country's tremendous mineral endowment. Obviously led by iron ore, second largest iron ore producer globally, but besides Australia. But in addition to that, just a rich bevy of other minerals that firmly fall into the critical minerals basket are going to be increasingly important in the years and decades ahead. So the coppers, nickel, lithium, rare earth metals. We're seeing a huge boom in ionic rare earth interest within Brazil at the moment. Graphite, vanadium, of course, with Largo, one of the two pure play vanadium producers globally. There's even a little bit of tin potential there, manganese. So it's like it's a whole host of different metals and commodities. Really, the only thing they're lacking is potash. So that's kind of the one sore exception. I guess uranium potentially as well, but that's also partly regulatory. I'm not sure from a geological perspective if that's the case, but we can throw uranium in that bucket. But really diversified and definitely a forward-looking mix of commodities. So that's a key advantage. Second, of course, is a deep mining history, going all the way back to the colonial era. It is important to note that pretty much, I think it's 90%, vast majority of the mining activity takes place in only 3 jurisdictions. That's Para State, where I visited on my trip, the Carajás mineral districts right in the heart of Para State. There's Bahia, and then Minas Gerais as well, are kind of the big three. So that's only 3 out of 26 states within Brazil, to my understanding. So it's focused within specific jurisdictions, which is worthy to note. Another huge advantage from my perspective, and I think this will pay dividends increasingly down the line, is that 85% of Brazil's power comes from renewable sources, 55% from hydro, and then if you tack on wind, solar, biomass, a little bit of nuclear, you're at 85%. So that's simply phenomenal. I think that helps from a permitting and ESG perspective. I think that will further pique the interest of potential project funders or off-takers. And again, I'm saying this in a very general sense. You also have to look at projects, of course, on a case-by-case basis, and there are plenty of projects in Brazil that won't go ahead, nor should they, for project-specific variables. But for the country as a whole, that's a clear tailwind from my perspective. And funny enough, some similarity to Quebec in that regard, where they're getting 90% to 95% of their electricity from hydro. So those are 2 huge checks on the ESG checklist, at least for those 2 jurisdictions. And then the fourth kind of key strength, I would say, and this ties back into your question, is strong relations with both the East and the West. And Brazil's done an incredible job actually walking that tightrope. Very strong relations with the United States and the West. I think one anecdote that supports that pretty strongly is the inclusion of the Brazilian central bank within U.S. swap lines. So the U.S. has swap lines with, we'll say, a dozen, maybe a few more countries globally. Brazil is one of them, and if you look at that list, it is truly, the blue chip allies of the United States. I think that's clear evidence that they're in our good graces. But also strong relations with China as well. And those have actually picked up a little bit since Lula took charge earlier this year. We're seeing some pretty significant foreign direct investment from the Chinese into the country. There's pretty big headlines made when BYD announced that they were building their first EV manufacturing facility outside of the Asia region. And it's also actually taking or being built on the site of what was an old Ford plant. So an interesting, perhaps changing of the guards, a bit of a symbolic investment from the Chinese there. But as it stands, Brazil's done a really good job of remaining friendly with both parties. So to your question, there is some concern, I think, on a couple fronts in terms of how these decisions, at least being made under Lula, could affect the relationship with the United States. You mentioned the BRICS and kind of increasing push amongst the BRICS country to both expand the bloc and also de-dollarize, and to be explicit about their goal for de-dollarization. So that's not going to make the United States too happy. Is it going to irreparably harm relations? I think not, but we'll see where it leads. And then, of course, the other issue is the war in Ukraine. From the United States perspective, Brazil has stubbornly refused to condemn Russia for their invasion of Ukraine, and have tried to play the peacemaker or stay objective, which is of course very different with the path that the United States has taken. So these are both potential, at least present the potential for fissures in the relationship between the United States and Brazil. So that is what I'm watching quite closely. I'm not panicked, obviously. We wouldn't be so heavily weighted towards the country, but I think it's worthy of acknowledging those risks. And I guess a couple other risks, just while we're on the topic specific to Brazil. This is more of a project-specific couple risks. But the first is any project on virgin rainforest, or even perceived to be impacting virgin rainforest, especially under the Lula administration, is dead on the water. So if you're trying to evaluate the ESG credentials of a specific investment, you really want to see that project on disturbed ground, and whether that's been used for agriculture or livestock grazing previously. That's good news for both Bravo's Luanga and Lara's Plan Alto project. I mean, they're based on ground that has been used for either agriculture and primarily livestock grazing for decades now.
Mm.
So they're not going out there and hacking down any virgin rainforests. Morally, that's a problem, but even morals aside, from a dollar and cents perspective, really don't think you want to play that game. And then also permitting from a tailings perspective. Brazil's from a technical perspective, Brazil is a very wet country, so that is a challenge. And of course, there have been two very high profile tailings dams disasters within the past decade. Both of those, interestingly, within Minas Gerais. So I think it's safe to say that we'll never see a wet tailings facility permitted again, at least within Minas Gerais. And if you're looking at an investment within that specific state, and you see management guiding that they will be able to permit wet tailings, I'd be very cautious. They're either lying to you or they're out of their depth and don't understand. I think the jury's still out whether we'll see wet tailings permitted elsewhere in Brazil. I think we probably will, but of course the bar and standards are going to be that much higher. And one could argue that this is a good thing, but that's just the reality. So those are a couple other risks, virgin rainforest and tailings that are worthy of consideration.
Let's move south from Brazil, and we don't need to spend a whole lot of time with it. But when you were talking, it just kind of my mind was wandering a little bit, and wanted to get your thoughts on Argentina. Obviously, there's a lot of exploration development happening, specifically in San Juan province of Argentina. But the currency situation in Argentina is just somewhat of I guess, a basket case right now, at least from what I can see. Do you have any clarity on the situation there with what their currency and inflation data is showing, what it means for developers and explorers? And it kind of made me think about this because obviously BRICS also was welcoming Argentina into their their little tribe as well.
Sure.
What are you watching there in Argentina, Matt?
And Argentina's tough. The saying "fool
Yeah.
me once, shame on you." Well, Argentina's fooled investors 10 times at this point, so it's been a home of broken dreams. With that said, it's also clear that there is quite a bit of money flowing into the country from the world's most credible mining companies. From a broader perspective, just like Brazil shouldn't be looked at monolithically, Argentina shouldn't either. I mean, there are really three provinces that you want to be invested in. The three S's: San Juan, and Salta, and what's the third here? Santa Cruz. Would be kind of the more hospitable jurisdictions
Sure.
for mining capital. But I think it is worth noting that we're seeing this momentum within Argentina. Of course, we're seeing the major discovery and continued success of Filo mining. We see Lundin Mining pushing pretty aggressively forward with Jose Maria. They haven't announced a formal construction decision, to my understanding, but they've poured a few $100 million into the project last year and are doing the same this year. So that's on ice, ready to go here. And then, of course, on the lithium front, a lot of excitement. All this is happening under a left wing leaning government, which I think is of note. If anything, it looks like the political pendulum is going to swing back to the right to some degree in these upcoming elections. That remains to be seen. But even if it doesn't, this Kirchner, she's just the VP, of course, but kind of this current left wing government in the Kirchner mode has actually been quite supportive of mining on the federal level, or at the very least, not supportive of mining. So letting the
Not a thorn
provinces
in your
kind of
side.
exactly, yeah, just
Yeah.
stay out of things and let provinces make their own decisions. I'm not expecting Chubut to allow Pan American to break ground anytime soon. But investors don't need that and elsewhere in the province. So look, there are promising signs, but given the number of corpses of investors and companies that have gotten bullish in Argentina in the past, there are clear risks. We do have some exposure to the country as it stands, actually entirely through royalties. So we don't actually have any direct development or exploration stage in investments, but we do have royalty exposure to Jose Maria and Taka Taka and AbraSilver's Diabios silver project as well. There's probably a couple others that are escaping me at the moment. So I'm following things closely there, and maybe not as
Mm,
closely as Brazil. To your question about currency, that remains a key risk. I don't see that changing anytime soon. There are questions both for royalty companies and for operating miners on how much of their profits they'll actually be able to expatriate out of the country. So those balls are still being juggled or still in the air. But I think it speaks volumes. At least the Lundin family, highly credible group, I think many of us respect very much, are kind of pushing their chips into the middle. Of course, they're hedging it a little bit with some Chile exposure as well on the other side of the border,
yeah.
but they're putting their money where their mouth is, and their mouth right now is in Argentina.
Yeah, well, in the Caserones mine, obviously the majority of that changing hands to the Lundins, and then there was a big move. Speaking of royalties, there was a big move
Mhm.
of I think three different companies coming in and acquiring royalty packages from them, and since then a couple of them have added to that royalty. I mean, Elemental Altus Royalties has been adding to their Caserones royalty portfolio as well in the last couple
EMX, of
of
course.
in EMX as well. But let me ask you this. I mean, you brought up royalties, and we haven't actually covered the royalties sector here on the podcast for a
Mm.
little while, Matt. I mean, it's amazing to me. I mean, I'm mainly looking at, I guess, like you could say, the development royalty spaces, the elementals, the EMXs, and the like. And there's not a whole lot of movement behind these. How are they being evaluated right now? It's been, I guess you see the news and they continue to do a lot of good work. However, the market just is not rewarding them for it right now.
That's right. Well, I mean, that this is the sandbox in which I play. I'm a big fan of the royalty business model, and particularly the junior segment of that market. Our largest, um, or our in position with the highest market cap in the portfolio is Altius Minerals at just around 1 billion Canadian. So, while I like some of the bigger names for fundamental reasons, the Francos and the Royals and the Wheaton Precious and Triple Flags of the world, we definitely focus on kind of the smaller snack bracket. Look, I mean, it's a very competitive game at the moment, particularly amongst precious metals and also copper. Also copper. We've seen a huge influx of interest into copper-focused royalties over the past couple years for sure, but even in just the past 6 months, the amount of copper-focused royalty transactions we've seen. Elemental Altus just did one. Bought a royalty covering a good chunk of Arizona Sonoran's Cactus Project down in Arizona. Elemental Altus has also added multiple times to their Caserones royalty stake, as you mentioned. EMX has done the same. Franco came in to Caserones as well. Royal Gold originated a copper royalty at Hot Chili's Costa Fuego project down in Chile. So it's really as hot as it gets on the copper front. But in general, yes, I mean the share price, particularly of these juniors, has been largely stagnant. I think that will be solved ultimately by higher metal prices and probably some consolidation down the line. So I'm patient with our royalty positions. They're much closer. They're much more on the buy and hold spectrum in terms of positions within the MJG portfolio. Whereas some of our exploration or development stage names, as much as I like the management team or the story, a single news release can change my opinion sharply on the value proposition and could cause me to exit in short order. Much longer leash within the MJG portfolio in terms of the Altiuses and the Elementals
Yeah,
of the world. Stepping back, I mean, the beauty of the royalty business model is that it's extremely asset light. And that's particularly true from a labor perspective. I put out on Twitter later last night pretty jarring prognostication from the Colorado School of Mines. And this just refers to the United States, but they expect over half of the U.S. mining workforce to retire by 2029. So we're talking
yeah,
6 short years. even if they're off by a little bit, I mean, this is staggering.
Yeah.
If anything, we need our labor force in the mining industry to double over the next 6 or 7 years, not fall by half. And so this is going to have tremendous implications from a cost inflation perspective. The average open pit mine has about 40 to 45% of its OPEX is tied to labor. It's a little bit lower for milling operations. Your average mill, maybe 25% of the OPEX is labor, but these are huge chunks of the overall cost. That's not going to get any better. In fact, it's going to get quite a bit worse over the coming years. Royalty companies, of course, don't have to worry about that cost escalation. They may, in terms of a development stage project that won't get built per se, based off of a labor shortage. But in terms of in-house, I mean, look at Franco, the gold standard. They have 30 different employees that are monitoring a royalty portfolio worth tens of billions of dollars. I mean, it's really a phenomenal business model from that perspective. It's also quite inflation proof. And I mean, that's a very important point. If you go back to 2000 and you look at the average metal price moves for kind of the major metal staples, copper, nickel, iron ore, we've actually seen price escalation over that period of around 4 to 6% per year for each of the major metals, which is maybe a little bit higher than people would anticipate, but that's over the past couple decades. Of course, if you're an operating miner, the negative there, I mean, it's good to see metal price escalation, of course, but your costs have risen commensurate to the metal price moves. In some cases, a little bit more, in some cases, a little bit less. But a lot of that metal price escalation is being obviated by higher costs at the mine site. Royalty companies, of course, get to benefit fully from any escalation in mining and production cost and commodity costs, of course.
Well, didn't I see Chile put out a report that I think it was, I don't think it, maybe it was specifically Codelco for its general all copper production out of Chile, but they've seen their costs rise 30%.
Yep,
It's just
that's a good data
huge.
point.
That is
And
massive.
they've seen what, three CEOs now in a 12 or 18-month period. Like, it's probably not a great sign for Codelco or production supply expectations out of Chile. Could be
Mhm.
good for those of us with copper exposure elsewhere in the world, or including within Chile, just non-Codelco related. But I think that
Yeah.
company's having some major issues. I mean, they have wonderful asset base, but mines that are in a number of cases getting quite long in the tooth. And also, they've come off of a decade of underinvestment in exploration, development, and just even maintaining their workforce as it stands. So
Yeah.
that problem's not going to shift
Hey, Matt,
anytime soon.
Matt, let me, since we're talking about the royalty segment, I mean, we talked about a few specific names in the exploration sector, and let's talk about if we can maybe pin down and get your thoughts here on a couple of those themes from specific companies.
Mm.
Elemental Altus. Listen, we've talked to Fred Bell a number of times this year. And I remember after the deal with Altus was done and turned into Elemental Altus, he said that even after this merger, that there was going to be this um, the value of that merger wasn't fully represented yet in the market cap, and so they're able to do
Mm.
these deals, these property deals and project deals that really weren't part of the original Elemental portfolio as a specific royalty company. Now, with the merger of Altus, that really opens up a whole different kind of strategy there for the company. And you were familiar with both of them going into it. I mean,
Right.
how do you watch this? Is the market becoming more familiar with the value proposition of this merger as these projects continue to be rolled out and vended out?
Yeah, I'll make 2 points here. And many listeners may actually disagree with both of them, but I feel pretty strongly about them. The first is that I think it's an advantage and a key differentiator to have the ability to organically generate royalties in-house. So this is what you're referring to with Elemental Altus. They have a very sharp geological team and a huge presence, particularly in Africa, that they got with the Altus Strategies merger. And if you look at the junior royalty space as a whole, a couple dozen names out there, and then even include the majors as well. There are really only 4, 5 groups out there that have active organic royalty generation business units and have cash flowing royalties. And Elemental Altus is firmly in that bucket. EMX is another name that you would have come across. There's Origin, that also kind of checks both of those boxes. Altius Minerals, of course, began as a prospect generator, and while it's more of a proper royalty company at this point, they still have an active, actually quite active royalty generation program going on in house. I think it's a huge advantage. The vast majority of the other guys out there are sitting in their offices working off the spreadsheets, and that's okay. But their only means to growth is through additional acquisition or through discovery optionality that comes from their existing royalty portfolio. But I think one of the beauties of having a generative unit in house is that in the background you can continually churn away, and maybe only one of 100 royalties that you generate in house is going to be a big winner for you. But that's all it takes. If every 5 or 10 years you generate something significant for the company, kind of at low to zero cost, that's a huge advantage. And it also just keeps your ear close to the ground. And you may come across additional royalty acquisition opportunities that you wouldn't have otherwise if you weren't out there with a strong geological team actively generating royalties. That said, plenty of folks out there, and I think it's pretty clear in the valuations of some of these companies that while I view organic royalty generation as a differentiator and a strength, something I like to see amongst junior royalty companies, the market as a whole sees it an entirely different manner. And if anything, is discounting these companies because they view G&A as too high, and they'd rather just see them hunker down, maintain their existing royalty portfolio, and grow through acquisition and not organically. I think that does change over the course of this decade. What's the catalyst?
A
What's that?
decade.
Hey, these things take
No,
time.
I get it. I mean, it's humbling. It's incredibly humbling to hear, Matt. But it's just like that is not the mentality investors have right now. Maybe that will change.
No,
But
no. But I think for the royalty business model in particular, that is the mentality you have to have. If you're in a
sure,
development stage project or an exploration stage project and things go to plan and it goes exactly as you'd like to see, you can make multiples of your money in short order potentially, 12 or 24 months. I don't think that's the right expectation to have whatsoever with the royalty business
yeah.
model.
But
But
this,
just as you
but this
mentioned
organic.
Elemental Altus.
Oh,
Oop.
sorry, but I want to. You mentioned these organic royalty generation moves. I mean, that's been a staple of a company like EMX ever since it originally IPO'd. They haven't been able to do a whole lot of deals lately because nobody can generate enough capital to actually do exploration work. And so isn't this like in this type of market, aren't we seeing, when that market's good and there's capital readily available, they were doing deals left and right through 2020, 2021. But in 2022 and 2023, those deals of, property vending and optioning out those projects that they generated has gotten pretty dang quiet. They've done a handful, but I mean that part of their business strategy has come to a screeching halt, I'm able to add. And then on top of that, and I'm saying this as I'm also a shareholder of EMX, and I know you are, but another micro theme is what's going on with TMUC. And I've expressed my frustration with this because it has been just crickets about the
Right.
development of those. I think they're in arbitration discussions, but it's been over a year, Matt. And
Yeah,
I
it's
know
been
this is
close
a
to a
big.
year and a half.
I mean, what is going on? I mean, I'm obviously frustrated. Do you share that similar frustration in this specific?
No question, no question. I think any investor does. There weren't any clear signs ahead of first production at Timok that this would be an issue. I will note that EMX acquired these royalties for a few $100,000,
Yeah.
so it's going to work out well for them. I feel very confident about that from a dollar and cents perspective. That said, in the years leading up to first production at Timok, EMX's royalty was talked up as one of the core royalties within the portfolio. And when things don't get to go to plan, you don't get paid. You pay the piper. And I'll also say that there were quite a few actually head starts over the past year and a half where it looked like they were getting close. News releases were indicating that hey, a resolution is imminent, and nothing's come to pass yet.
Mhm.
I do still think there will be a positive resolution on that front. Um, Believe it or not, I know there's a lot of skepticism out there, but I do. And I also think that basically any resolution at this point is going to be greeted positively by the market. Depending on the specifics of the resolution, it could be greeted very positively or or moderately positively. But a lot of folks have thrown in the towel on EMX because of this waiting game. And look, from a company perspective, it's the number one thing they can do to increase their share price and get get back some of the credibility that was lost, given how this saga has gone. But yeah, in terms of their business, there's nothing more important than getting that resolved, both from a dollars and cents perspective, but also just from a market perception perspective as well.
Yeah.
And I do think they get there. But look, Zijin's not an easy group to negotiate with, clearly, and this is dragged on far longer than folks would have expected, and far longer than EMX guided, in the immediate aftermath of the dispute. It is important to note they're actually not in arbitration. That's a route that EMX can take. But as of now, they're in what is described by EMX as cordial conversations. And we'll see. I mean, look, I think each month that goes by without a resolution, the EMX share price will be continually will get punished each step of the way. So the sooner they can get this resolved in one form or another, the better for the company and for shareholders.
Well, if it's just cordial negotiation, hasn't the cordiality of it run its course? I mean, don't the shareholders such as you and I have? I mean, obviously, I'm a very small shareholder, but major shareholders. I mean, when is enough? And it pushes it to arbitration.
Look, that's a card that EMX does have up their sleeve. I think they have a compelling case to make if it does go to arbitration. The fact that they haven't pressed that button indicates to me that they still see light at the end of the tunnel, and maybe we're closer than people think. Obviously there's a good reason to be jaded at this point, but we may be closer than people think. And to EMX's credit, they do have a history of being able to pull off these pretty complex transactions and negotiations. One just
100%.
has to look back to Malmish, and the fact that they were able to get 70 million US out of that is just wild. I mean, that would be worth less than $1 million in the current market environment. So they played that perfectly, and they do have they do have a track record of being able to pull these things off. But again, I don't like how the company has message to the market, and I in terms of how the saga has gone, and I think they've paid a price in terms of the share price performance as a result.
Matt, I've taken up a ton of your time, and I told you I was going to take up as much of it as I can, but I do let's take a step back here. I know you and I are going to be seeing each other again in Beaver Creek, and both of us have a ton of one-on-ones, and luckily for me, I get to record mine, and you get to keep everybody else in the dark regarding yours. But how are companies? You're sitting down with 30, 40 different groups over 4 days at that the one-on-one meetings at Precious Metals Summit. How are you approaching these meetings? How are you evaluating your meetings with new companies or even currently known companies? What is your approach going to be given the market backdrop we're working with right now?
Yeah. And look, I mean, it's important to be able to prioritize and think about how you go about these conferences strategically. Because to my understanding, we're looking at upwards of 50% more issuers. So obviously there's been a ton of inbound. There's a ton of companies that I'd like to meet with, I'd like to learn more about, but for one reason or another, it's just not, I just don't have the time for it ultimately. So I obviously prioritize our current holdings first and foremost. That is my number one priority, to catch up with our existing investments, get a sense of the good, the bad, and the ugly. And then once accumulating that information, making a decision there, whether to sit tight, whether to add more, or potentially to sell or even liquidate entirely. The second rung would be companies that I've been following for quite some time, that I'm interested in, that I could see us potentially investing in, but haven't yet for one reason or another. And that could be for a whole host of different reasons. And then there's a third and fourth tier of meetings, I would say. One kind of classification there would be companies that maybe we're not likely to invest in, at least in the near term, but I'm interested to hear what they have to say because there's opportunities to glean information, maybe about a jurisdiction that we're invested in or about a company that we're invested in. So that's more of an information gathering exercise, to be perfectly honest. And then there are groups that I know nothing about. I'm not going to take a meeting with a group that I've never seen the name before, unless there's somebody in my network already that has tipped to me and said, "Hey, this one's worthy of a look," or "Hey, I'm invested in this one. Why don't you have a look?" So that's kind of how I prioritize things. And look, I mean, if I came out of the conference with a single good investment idea, that's a success from my perspective. Catch up with our positions, get a lay of the land. Even a single investment idea that I'm excited about makes it worthwhile. Because as you know, the MJG fund has very low turnover. I
Yes.
mean, heck, we've been adding to positions and chipping away on the open market with numerous positions. We talked about Kennerland. But if you're talking about new investments that have entered the portfolio, I mean, we added a couple in the earlier stages of this year in the early spring. It's been 6 months since we've added new names, so I'm really picking my spots here, and it only takes one or two new ideas to really get me excited.
All right. He's picky. He's picky, ladies and gentlemen. That's what we love about you.
Gotta be,
So
gotta
thorough
be.
with, yeah, so thorough with your due diligence and approach to this sector. Matt, I appreciate your time. It's really good to connect. It was a great conversation. We covered a lot of things, but in fact, we didn't even cover some of the things we wanted to cover. But we'll do that another time, I'm sure.
Yep, always next time.
Appreciate your time. Safe travels here in a couple weeks. Look forward to seeing you. It's going to be a fun time.
It will be. I'm looking forward to it, Trevor. And thanks
All
again for
right.
having me on.
Yeah, thank you. All right, everybody. That's a wrap here on Mining Stock Daily this week. Special thanks to Matt for coming on and all the rest of our guests we had on this week. It's going to be a very busy September as we wrapped up August, and so it usually is a pretty busy September. Have a great long weekend. We're going to be back Tuesday morning with the morning briefing since it is a holiday week here in the United States and markets are closed on Monday. So we'll talk to you in a few days. Be safe, be well, have a lot of fun. All right, take care, everybody.